On the road, and I was just thinking about what's going to happen over the next couple days. And what we do know is that they're going to announce something to do with interest rates tomorrow. Are they going to raise them? I don't know. They're going to lower them? Maybe. They're getting a lot of pressure from the Trump administration to do so. But what I do know is that the big money movers, the institutional investors, these are the people who really move the markets. These are the market makers. They already have a good clue of what they think is going to occur. Yes, yes, I'm driving, and there's a vehicle on the shoulder ahead. Um, the these guys don't really know for certain, but 9 times out of 10, they've already priced in what's going to happen. It's that one time that really throws markets into turmoil because retail investors will react with the news, but retail investors react in a couple different ways. One is the time delayed because a lot of retail investors have jobs and they are working. One of my good friends, man, there's a lot of vehicles on the road. One of my good friends, he's always, what happened today? Why'd the market drop? Or and asking me questions like that. And sometimes my answer is, I'm still trying to figure it out. But and that was my answer yesterday. And when that new China AI came out, was I prepared for that new China AI? No. But if you go back and you watch my videos from a couple days earlier, I was saying I would. It looked like things were going to drop. I didn't know what was going to drop, but sometimes when you look at the charts, you don't need to know the news. You just know the news is coming. The market's prepared for something. And that preparation in the market that happens is the institutions. It's when the institutions are caught off guard that you get total chaos. Like I would expect next Friday when the January jobs report comes out, I would expect there to be some surprise in the market because over the last administration, the jobs report was always a lie. Every single job report, feel free to go out there and fact check me and post in the comments if I'm wrong. But every single job report, to my recollection, was corrected 60 to 90 days later. And then on the annual audit, corrected again. Remember that one time there was over the previous year, they adjusted the jobs down by some 800,000 jobs that were over-reported. So I think the new administration is probably going to focus on being transparent. And I think based off of, and this is just a gut feeling based off how they've reacted so far or how they've done things so far. They want the American people to trust the institutions again. And the only way to do that is for the institutions to be transparent. And will they get the jobs number correct? No, it's never correct. But will they be off by 800,000 jobs over a period of a year? Highly doubtful because they will make the adjustments within the 60 to 90 days after. And then when you get to the annual audit, the number may be adjusted slightly, but it will not be an 800,000 adjustment because that 800,000 adjustment was after several thousand was adjusted 60 to 90 days later. Those quiet adjustments that they didn't really broadcast. I'm getting kind of off on a tangent here, but what I'm trying to say is expect that a certain portion of what's going to happen is going to happen. And somebody recently pointed out something very interesting to me. The market dropped dramatically over the past 24 to 48 hours. There was this massive change in the market. And let's pull up the main and come down here and look at um well we can one look at the gold market. Gold market tells a story of what we're going to put this on the daily so that we can see you can see that this was the market. Um Interestingly enough, gold went down yesterday. Usually when there's uncertainty, gold goes up. That's kind of weird to me. But now let's go back into the watch list and let's look at what I was really wanting to get to here, which is the S&P 500. This kind of will tell us what a different story. Now, if we look at the S&P 500 on the daily, you see that massive drop between that red candle 2 days ago and that green candle yesterday. That signifies a well, actually, it signifies several things. And this, I didn't realize how big of a swing the S&P makes because usually charts like to fill in gaps, and when you see gaps like that, they're usually filled in at some point in time. But that gap down was on the news. That red candle was Friday, and that green candle there is Monday. It opened up. You know, let's see if we can get some actual numbers going here. It closed on Friday down, actually. So the it opened on Friday at 61 and it closed $21 down. But it closed at 61.01. But then the open on Monday, if you look here, you can look up in that top of the screen there, and the open was at having a problem reading that number, 59.69. So it was a big drop. It's not as massive as it looks on the screen. The zoom makes it look big. But so there was a drop into that. And then uh it went back up to 6,000. It's still almost a 200 point drop. I mean, that is not small. So we regained most of that during the day to be only $88 down for the day. And this is, the top 500 companies in America. Well, the S&P 500, I'm assuming it's the top 500. It may not, there may be some larger companies that are not included for some reason, but for the for the most part, this is, in my opinion, the best indicator of economic health because it's the largest cross section. Almost had a cough there. I tried to hold it back. It's the largest cross section of companies out there that you can do because your other option is the Dow Jones, and the Dow Jones really is I think it's 30 companies that they pick and they change from time to time. Ooh, look at that nice little W pattern right there. Um, and the Dow Jones is, it's I guess it's supposed to represent certain industries, and they call it an industrial average. So it kind of takes strong companies in different industries, and they do change it out from time to time. It To me, not a as big of an indicator as the S&P. But what I do find interesting about the Dow Jones is I'm going to change this calendar out to a, a monthly calendar. I want a really big monthly calendar. And what you can see that Fibonacci I put in there back in 2023, and it actually looks like it came back and retraced to the golden pocket. And yeah, so I'd have to go back and look at that better on a computer screen, but I didn't even realize that was still sitting back there. I'm going to go back and look at that later, maybe make a different video. But the story I was trying to tell by getting here is more of a story about inflation. Now, you see that massive spike that's in there on the that massive spike down. That's the COVID spike down. And when COVID happened, we were right around, I want to say we were right around 30,000 for the Dow Jones. And remember, now we are at the end of the current administration. We're at 44,000. And so we'll give Joe Biden some credit there. I mean, the economy did go up. I mean, it's 50%. The Dow Jones is 50% higher than when he, well, maybe not when he took, yeah, when he took office, I'm assuming. Yeah. Anyway, so the Dow Jones is about 50% higher. But is anybody else feel 50% richer? No, that 50% is all fake. It's all fake based off of money that's come into the market and, you know, artificially inflated our currency even more. And, you had the first COVID bill under Trump, the second COVID bill under Trump, the third COVID bill under Biden. Then you had the Inflation Reduction Act, you had the CHIPS Acts, you had all this, the infrastructure bill, all this stuff that they claim as victories. The only thing it was victories for were legislative victories. It wasn't victory for you, it wasn't victory for me. It was victory for the legislators so they had something to go back and say, hey, look what I did. Well, what you did was make everybody poorer, except for the people at the top, this top 30 companies. Because now we'll go back and look at that S&P 500 over the same time frame, and let's see what happened there. We'll come back. Right, looks like it did pretty damn good itself. There's your COVID spike down. We spiked down to 2,000. We're up at right now 6,000. So yeah, it tripled from COVID. But that's all money they threw in the market to stop the bleeding because everybody was let go from work. And you had to pay your bills. I had to pay my bills. And they gave this artificial stimulus through unemployment and through stimulus checks and stuff like that. That money was just magically pumped into the market. You can't just pump money into the market without having some repercussions. So there's another person, Mike Mahoney, maybe is his name. Look him up. I'll see if I can find his videos and put a link in here to his videos. He did a video series called "The Hidden Secrets of Money," and he did a second part two to the series. But all you really need to know is the part one of the series. And if I remember, it was either him or Robert Kiyosaki, but they are somewhat adjacent. Um, but one of them in their video, and I'm pretty sure it was Mike Mahoney, was talking about there's going to come a point in time in the future when helicopter money is going to be the only way they can sustain this inflation bubble that they keep creating. And the inflation bubble is that's what they did. They literally helicoptered in. I want to say between Trump and Biden from the start of COVID, Trump did all right prior to COVID. That it was that existential threat of COVID and his bad guidance he got from Fauci and others. And if you don't believe it was bad guidance, I encourage you to go read the book from Deborah Birx, the other doctor that was working with Fauci. She she admitted in her book that they did give Trump misinformation deliberately to make him lock things down. They would falsify reports and so on and so forth. And there's going to be more stuff come out now that we've got the establishment out, because that's what Biden really was. He wasn't a Democrat; he was an establishment, and we're not going to go down that road. So Mike Mahoney theorized that at some point in time, the only way to maintain the Rouge was helicopter money. Well, guess what happened? We had COVID. And if I remember correctly, he may even said through a pandemic or something to that effect. I'm going to go back and watch them myself. But you have this helicopter money that came in, and this helicopter money is what ultimately drove the price up, or drove everything up. It's why eggs are about $1 an egg now. It's why steak, even cheap steak, is like $12 a pound. It's crazy for cheap steak. $12 a pound, you used to be able to get a good ribeye for. Now, I mean, that's $20 a pound. I remember back pre-COVID at the local grocery store that they used to have this prime rib dinner every Thursday night, 8.99. It had prime rib, nice, big, healthy portion, potatoes, some vegetables. You got some au jus, some what the horseradish sauce. Man, it was amazing. 8.99. You couldn't beat it. They still have that dinner. I think it's 17.99 now, and that doesn't include the au jus and horseradish. If you want that, you got to pay extra. So, and I don't fault the grocery store. I mean, they've got to buy the product, and they've got to cut corners where they cut them. If you want au jus, you need to pay for it because that's how they keep the cost down for the people who don't. So, anyways, back to the topic of where do I think we're going over the next 24 hours? Ultimately, I think up and to the right. And what I mean by that is the price is going to go up as we go to the right of the chart. But I don't think it's going to be a straight line. You see this line right here, the S&P, and how it's kind of up, down, up, down, up, down, up, down. And these are weekly charts, or weekly candles. I think we're going to see a lot of this. But what somebody interesting pointed out, and I wish I could remember who it was, but they recently pointed it out on a video that I was watching. And what they said was, what's different now than in previous bull markets is every bull market, there is 10, 20, 30% drops. It might have been Anthony whatever his name is. It might have been him who pointed this out. If not, I'm giving him credit anyways, and let the ether fix it. Um, anyways, he said this time is different. That drop that happened last night, if we look at the drop in the S&P, we saw a 10% drop that did not recover yesterday. But the 10% drop in Bitcoin recovered by end of day. The 10% drop in the price of XRP, we're back to where we were. We're still not back to where we were on in the S&P. If we go back and change this to a daily like we had before, and let's zoom in, you can see we're still not back to Friday's close. And crypto is back and pushing higher as we speak. So I'm expecting to see all kinds of craziness, but just hedge your bets. And what I mean by that is don't get in over leveraged positions. In fact, going into big decisions like this, I would probably so here's what I'm going to do. I've got some positions open right now that are in very good spots that I opened up during the drop yesterday. Now, my XRP, on one account, my XRP buy-in is at 278. I'm way in the money right now. And I've actually um, been, I think it's actually been increased up to 284 because I've been increasing my leverage and doubling down on what I have in there, or not doubling, but increasing, which increases your buy-in point. So I'll probably put like a 290 stop and sell out of it at 290. Then I will probably follow that up with something similar on my Bitcoin positions and everything. Anything that I don't have a position or in an account where I don't have a position, 'cause I have more than one account, so that I can have different trading strategies going on. But on an account where I don't have a position open, I'll probably, because I still think we're going to go up no matter what comes out of that meeting tomorrow. I'll probably put a scaled in entry, our ladder entry, starting about 5% down, going to about 15% down, and make it low leverage, probably two, maybe 3x, and I'll do my buy in. Now, what does that do for me? Well, if I do 2x, that means I'm able to bet two times my money. So if I have $2,000 in the account, that means I can make 4,000 in buys. Well, if the first buy is at 5% down from the current price and the last buy is 15% down from the lowest price, if it goes all the way down, my average buy-in will be 10%, 10% drop from where we're at. If we recover, I'm now 10% up on my money. Actually, a little bit more. There's some other funky math there. If we recover, it's like be like 12% up, but we'll just use 10% up. So I'm 10% up on my money, but I'm 10% up on two times my money. So I'm 10% up on $4,000. So I've made $400 on a $2,000 investment. Um, that's huge. That's 20% profit. And I'll let it ride up a little bit further and ultimately cash myself down to be in a 1x. Or sometimes I'll let it even ride longer because if I think it's going to keep going up, perfect. So other positions, I'm going to probably scale back on some things, just thinking that, hey, it might fall back. It might fall back. Let's put some buy-ins that in case it comes back. And if it doesn't come back, great. Um, that means I'm making money. If it does come back, great. I'm making money. Because like I say, I don't know if I say it on every video, but I say it all the time. You don't make money when you sell. That's when you collect your money. You make money when you buy. So you have to buy in a position that makes it to where you're going to make money. And so that is what I'm after. I'm after setting a position where I can buy and make money on the sell. It's super simple, super easy to go this way. And I know if you're new to this and you're listening, um, I may be talking above you. Hopefully I'm not. I'm not that smart. But I guess that's all I really wanted to say was be cautious in the next couple days and be cautious in the second half of next week. Because Thursday, Friday, things can get kind of hairy with the jobs report coming out. Always pay attention to economic indicators, and I'll do a couple videos on different economic indicators and when they typically come out, so that you can, if you're following this, you can learn a little more about the economic indicators and know what they mean and how they affect what we care about, which is the money. Um, and I guess that's it. Oh, and another topic I want to cover in a future video, so look out for this, and I'll probably put a link in this when I do make this other video, is what to do with your profits. And the reason for that is you got to have a profit taking strategy. But if you get profits, and so if I get, let's say over the next month, I make $100,000 trading, and I want to go out and buy me that Audi that I really, really want. That's a great idea. I can go. I just made $100,000. I can make 100,000 again, maybe. What if I took that 100,000 and put it as a down payment on a property, a rental property? Or better yet, take that 100,000 and put 80,000 as a down payment to a rental property, put 20,000 in reserves. So if anything needs to be done with that property, now I rent that property for $1,500 a month. I have a mortgage that'll come with it. Let's just say $500 a month because of high interest rates, because I'm putting that much down. My mortgage shouldn't be that high, but with high interest rates. Um, so 500, we'll figure 15%. Well, it can go 20% of collected rent going to the management company, and another 10% going to the HOA. So we got 4,500 there. So now let's just round this up to an even $1,000 a month of the $1,500 a month is servicing the loan and paying for everything else in the property. Now we'll take half of what's left and increase the reserves. You already have a 20,000 reserve, but we're going to increase the reserves. I personally would probably try to uh, take that 500, or of that 500, take 250 of that a month and put it into a Bitcoin reserve for the property. And the other portion of it, I'd probably want to put into my pocket. Now, 250 a month is not going to pay for my Audi. No, it's not at all. So I can either put that in my pocket, or I can increase my crypto holdings again. I could pay the mortgage down, pay it down quicker to where I don't have to pay that $500 a month towards the mortgage. And if I take that 500 a month away from the mortgage, now I've got 1,000 in my pocket. And so there's all kinds of options. And what I want to do is maybe I'll try to put it in a PowerPoint and kind of draw this out and show how you take your profits and use those profits to make yourself some more money. That way, this is how the rich become rich. They don't buy things, they don't buy cars. They do buy cars, they buy nice cars. But Robert Kiyosaki once said in one of his books that his wife wanted a Jaguar, and he challenged her to figure out how they were going to pay for it. And instead of buying the Jaguar, they took the money and bought an investment property and let the investment property pay for the Jaguar. And I guess that's what I'm trying to say. There was another guy, Russ Whitman. I don't know. He was another real estate guy that I followed a long time ago. I went to one of his lectures, and he talked about something very similar. That when he made profit, he could go out and buy a car, or he could buy a second house. And now he's got two properties, and he's even richer. And one thing I learned from him is, you know, what you're making is not just the money you see, it's the money you don't see. The growth in equity, real estate prices go up. Although I do think there's a chance that we may see a crash in the real estate market. We are seeing more and more real estate on the market. Inventories are getting very, very high, which means they're having a hard time selling with the interest rate as high as they are. And even if interest rates go down, I think you're going to see a hard time selling. And I think that has to do with um, it's all supply and demand, and you've got supply right now high, um, and you had high supply, but you now have a reduction of supply occurring, which really has to do with the illegal immigration. We don't have the illegal immigrants coming in like we had before. They put a big crackdown, and they're starting to send thousands of people a day back to where they came from. Um, and so you're starting to see less and less policy needs. And so as this drops, you're going to see a drop in rental needs. You're going to see property prices starting to go down. Long story short, I foresee in the near future a real estate bubble, and we may see another real estate bubble similar to 2008. But we can watch that. We'll cover that later. I think I've rattled on enough here. I just wanted to get out some thoughts while I was driving.